Okay, good morning. How's everyone doing today? Good morning, Ms. Yardella Ross. Hey, Ayakame. Hey, Pips Apprentice. Good morning, Jan B. Hope you're all well. Let me know if you can hear me okay, see me all right. I think it might be a little bit loud, but might work out a little bit better later on. Let's see how that goes. All right. Sound is good, a little bit too loud. Good morning, Diana. Hey, Jimmy, how you doing? All right, let me just tune that a little bit. Let me know if it gets a little bit too soft after that. I think it's a whole... I'm not going to try and make up and figure out why. Hey, Booba, how are you doing? Okay, so a quick risk disclaimer. This live market analysis is sponsored by Max Global Markets, a brokerage firm that is registered with and regulated by the Monetary Authority of Singapore, the MAS. Max Global Markets has no control over or influence over the content of this analysis. So please remember that the information in this analysis is offered solely for educational and informational reasons and does not constitute financial advice. With that, let's keep going. All good over here. Everything is okay. Thanks for that. Let me know if anything changes, okay? And if anyone is joining us for the first time, where have you been? But good to have you with us. And for all the regulars, welcome back. Good to have you with us. Again, the link is there right at the top. If you haven't already, do make sure you join us on Discord. That's where we can take our conversations beyond this session. And also, if you can, at any point in time, leave your questions, leave any requests. Ayakame has just done that for the euro dollar. I'll share more with you about that shortly. And through the session, do help me out. Click that like and subscribe button, that thumbs up button, that little rocket ship button on TradingView. Wherever you are, click something. Gets more people onto the stream. Okay? So let's see. Hey D-Train, how are you doing? Okay, I've got something here I need clearing up. Sound is explosive but very audible. Okay. I like explosive. That might be a good thing. Okay, so as we look into what happened yesterday since we last spoke, nothing much. We had a whole bunch of PMI numbers for the Eurozone. As we had kind of expected, it didn't do too much in terms of price, but through yesterday, it was a retrace, pretty much like a retracement day. Yesterday, we saw the big move because of the non-farm payrolls on Friday. That was this big move down on dollar index. It came down to that 105 level. We were expecting it to continue dropping, but as I said, retracement day, we saw it climb back up. Now that it's broken above 105.30, we are looking at a possible bigger move higher, right? So I think that that downside move might be the end of the downside move for now, but we're looking at maybe a retracement back up on the dollar index. It is at a level that we saw since the 20th of September. So it's bouncing off that level, quite reasonable for it to be reacting this way. Okay, so hey Jack, how you doing? Good morning, David. With that, not much happened last night, but early this morning, very early for you guys, not so early for me, at 11:30 a.m. GMT plus 8, we did see the RBA release interest rates decision, taking it from a 4.1% to a 4.35% as expected. So a 25 basis point rate hike from the RBA. Pretty much as expected, and as we spoke about yesterday, it was because of inflation climbing to that 5.6%, breaking away from a few months of slowdown in inflation growth, now pushing back up. So we saw the RBA decide to raise rates by 25 basis points. With that, then looking at the rate statement as well by Michelle Bullock, we had the inflation in Australia has passed its peak. So that's important to know, right? So it's not always just about looking at the number, it's also reading the statement. Things to pick out here is that inflation has passed its peak, but still too high and more persistent than expected a few months ago. Okay, so it's past its peak, it's turning down, but it's not dropping as much as they expected or as quickly as they expected. So it's more persistent than expected. Okay, latest reading on CPI indicates that goods ease further, but services are continuing to rise briskly. We saw that in the CPI data already. They're still working towards a target level of 2 to 3% by the end of 2025. So no big rush here from the RBA. They had held rates steady, but in this time they have raised rates since August. Board meeting updated on inflation, that's fine. High inflation weighing on real incomes, returning inflation to target within reasonable range. Where's the line I was looking for? Global uncertainty. Further tightening of monetary policy is required to ensure that inflation returns to target in a reasonable time frame. That 2025 target time frame will depend on data and evolving assessment of risk. In making its decision, pay close attention to developments in the markets, remains resolute in its determination to return rates, inflation to target. Okay, and will do whatever is necessary to achieve that outcome. So overall, what we're seeing here is that they have raised rates because of inflation climbing against expectation, and it sounds like they are looking at possibly increasing rates further if required. Okay, you can look at the headlines there. Warrant an increase in rates to be more assured that it will return within its reasonable time frame. Whether further tightening is required is going to depend on data and risk assessment, which we all saw already. High inflation weighing on that, we saw Aussie dollar down. Okay, so what happened on the release of this news event at 11:30 a.m. GMT plus 8 was that we saw the Aussie dollar. This was right at 0.6483 on before the news. Right before the news, it pushed up a little bit before dropping on release of the news, showing you on an M15 time frame. At 11:30, pushed up, and then it started dropping. Right, it started pushing to the downside. So why we had some questions on the Discord group on why is it dropping, right? Why is it dropping despite a rate hike? Typically, we would see that a rate hike would lead to an increase in the value of the currency because there's more demand for the currency. But at this point, why is it dropping? It's because of things here in the statement where it shows that life is difficult, it hurts and erodes savings, household budgets, makes it hard for business to plan and invest, and also significant uncertainties around the outlook, right? Price inflation persistent, and wages will respond to the slower growth in the economy at a time where labor market remains tight. Okay, so outlook for household consumptions remains uncertain. Households experiencing painful squeeze on finances. So, rate hike, but doesn't sound like very good news for the economy. And what we've seen on the recent times is that most of the time after a rate hike from the RBA, we saw it drop. And that's why yesterday, if you scroll back to yesterday's video or live stream, I was saying that we were looking for it to test that resistance level and possibly look for it to turn down. Didn't go up to that level, sat right there and pushed lower because of what happened here on the dollar index. Okay, so now that, and I think I posted it in the group as well, is now that it's broken this support level at 6440, around 6440, we're possibly looking at further downside here on the Aussie dollar. So Stan just asked the same question, right? Why it dropped? Wasn't it meant to rise? Yeah, so it dropped because of, sounds disappearing. Let me do that again. Okay, so it should be back up now. Okay, let me know how it goes, Jambi. What was I saying? So it dropped. Yeah, so it dropped because of the comments, and if we went through just the last time they raised rates. All right, let's make it a lot better then. Okay, so just the last time they raised rates from 3.85 to 4.1 on the 6th of June, we saw it push up. I think we did that yesterday. We went from 3.6 to 3.85 on the 2nd of May. I have to scroll back on that. Let me see how I do that. The easiest way is to do that. Go. Right, so this was on the 2nd of May. We saw that push to the upside as well. So it pushed up, right? Overall, we've seen that following the trend, pushing to the upside again on that was a push up. So on the 1st of November 2022, let's just try and see some examples. 1st of November 2022, right? This was on, where was it? Release of the news about there, right? It had little reaction. So ultimately, it comes down to what was said in the statement about, households being not performing very well because of the current rates. And also one more line there, revised set of forecasts, weight of this information suggests that the risk of inflation remained higher for longer has increased, right? Suggests that the risk of inflation remain higher for longer has increased while economy is experiencing a period of below trend growth. Okay, so it was a rate hike, but statement came out with rather negative or rather dovish views. Still a little bit soft. Let's just try and bump it up a bit then. Okay. Hope that sound is a little bit better for you guys. All right. So that was what happened on the Aussie dollar that we are seeing, that explains that drop following that interest rate decision. Okay. Hey Ismet. Hey Goju. How are you doing? Now, with that said, then what else do we have for today? Not much else. Not much else for today. We'll see that, okay, not that there's not much else. There's a lot of news, but not going to move prices too much. I think that we are looking at a retracement, which could lead to a rebound. Okay, and then through to tomorrow at 10 a.m., GMT plus 8, we have inflation expectations to come from the Kiwis. 2.83. See, previous in August was 2.79 expected to, and it went up to 2.83. We might see another increase here on the Kiwi inflation, and with Governor Bailey speaking with Fed Chair Powell speaking as well. Chair Powell speaking at the Division of Research and Statistics Centennial Conference. I don't think it's going to do too much. So like we were saying, or when I did the review of this week, I think we are likely to see a little bit more of a trending scenario. So now looking at the charts, okay, today being the 7th of November, we saw that drop and we saw that retrace. Now if I took this whole move, so that was just that move from the non-farm payrolls or non-farm employment change number. Now looking at this whole move, my question to you or to myself is, now that the dollar has retraced back up, what's going to happen at that 38.2 and that 105.66 or 105.70 level? Okay, so let's take that one away, and I'll take that one away as well. What I'm looking for here is, since that is broken past that 105.30 level, we're expecting a higher move to the upside. If it breaks above this level, then we could see it climb back up towards 106.25, right? If you look at it in the overall scheme, that's what happened the last time round. It bounced off this, and when it broke above 105.7, about 105.70, we saw a sustained move to the upside. And I'll show it to you on the H4 time frame as well. You'll see that it came back in, so it's Bollinger's okay. It came back in and it looks like it's pushing back up, but it does need to first break above that 105.70 level. Okay, would it react at the 61.8? I think that's most likely the scenario. So what we're looking for here on the dollar, and I wasn't very happy yesterday because we were looking for that continuation to the downside. When it retraces, a lot of our trades did not get triggered. Right, we were looking for trade setups higher or for that continuation. It did not get triggered. So now with that retracement, I think that we could be looking at a dollar strength. But what needs to happen first is that dollar would need to break above 105.70, which is that 38.2 level, right? And then it could break above it, could rise to 106.25, which is that 61.8 level. Okay, so we're looking at it to push up, needs to break above that resistance level first. I'm actually happy, I would be happy to take this away, make it dotted. No, I would actually revise this and put it more recent, right? More recently at that point at 105.40. So what we're looking for is for it to break above this resistance before we could see further upside towards 106.25. Make sense so far? Let me know. Good morning, Jamil. How are you doing? Let's see. Okay. Just checking a few things. Okay. Thanks for that, Ms. Delaros. So now that's pushing, expecting that to push up, continuing the upside, breaking 38.2 to 61.8. Beyond that, we could see it rise up, but I'm thinking that with no big major news for the US today, might see it push up, or will see, likely to see it push up. I don't think we're going to see a big, huge move. Okay, so with that, then looking at the Kiwi dollar, that trade did not trigger. We'll take that away. all right, and you see that it's broken that trend line, right? It broke that trend line, and then what else to pay attention to from that is, again, very similar to the dollar index, is the Kiwi dollar is now testing that 38.2 level. It's breaking below this resistance turn support level. So it needs to break past this point. I think this could be quite a soonish kind of trade, if that's a word. Selling down from here about 5915. I would say 5915, 20 pip stop loss, a good 40 pip take profit, or 45 pip take profit towards that 61.8, which was the previous swing levels here that we saw on the 24th of October. So that's what I'll be looking for, right, on the Kiwi dollar. Sell 0.5915, stop loss 20, take profit 45 to the downside. We did not see that push up, so that trade did not trigger. It's still too early to enter right now. This trend line is done. We can take that away. It's still too early to enter right now because it's still at that support level, support area. Okay, so remember that we are looking for this to break above and also for this to push down. So looking for that downside move, not ready yet. 5915, 20 to 45, that would be reasonable. Okay, then onto the Aussie, like we were saying, that one we can take away because what I was looking for yesterday was, hey, ideally it would have gone up, hit this resistance level, and then turned down. It didn't do that. On release of the news, it pushed lower. Then what I would say here is that with this move, because we're anticipating this to push down here, maybe what we could see here on the Aussie, let me just check a few levels. Hey Pushka, how are you doing? $38.2 is right there. 50% is right there. And we have a dotted line at about 61 right there. So I'll tell you what I'd like to see here on the Aussie. Okay, I would like to see this retrace up a little bit and then after that turn down to this point. And these two support levels are, I would consider that point a little bit more, not so much this, it's a bit too far away. And I might not think of that too much. Okay, now I have that there. I'll put this as a bit of a dotted line instead. Okay, and we'll look for that. So why I'm thinking that it could retrace is because we saw a big move on the Aussie dollar to the downside. We saw a big move of the Aussie dollar to the downside, looking for, might retrace up a little bit, test that support turned resistance level. It might even form a bit of a head and shoulder pattern if it retraces a little bit with the neckline at that point. So I'm looking for it to break down from this and head down to that 61.8 level. Okay, so, and with a bit of a hesitation at 50, then we're looking at this case 6415, take profit about 50 pips, stop loss 30 would be best, but because it will be a head and shoulder pattern, or ideally a head and shoulder pattern, we could even be looking at 20, keeping it quite tight. Right, breaking that neckline, keeping stop loss just above that neckline, that would be reasonable. So Aussie dollar could wait for retracement to complete. Then we look to sell down from 0.6415. Stop loss 20, take profit 50. Wait for the retracement complete. Sell at 0.6415. Stop loss 20, take profit 50 to the downside. Okay. Pushka, thanks for watching the prop trading video. Hey, if anyone wants to watch that, it's on the YouTube channel. Do I use ladder pattern or order flow while trading? I don't know what ladder pattern is. I have no idea what ladder pattern is. So definitely not ladder pattern. I don't particularly use order flow, but it's more the way I trade. The way I show you my setups here is the way I trade. Does consider a little bit of order flow, does consider trend, does consider the news. So hope I answered your question there, Pushka, about the style or the methods. Okay, so it's a combination. It's not exactly order flow. It's not exactly one method or other. It's really a combinations. Okay, might not even retrace that much. Might come up a little bit before pushing down, but I'm happy with that. Then onto the US yen, you see that all these did not happen, so we can take all that away. And this is one thing that I really dislike when it comes to retracement days, is that you don't know whether it's going to retrace all the way or it's going to retrace a little bit. You don't know whether it's going to retrace all the way or it's going to be a correction back up. Okay, so this case, you see that on the yen, found support here on the trend line, and again and again. And in this case, right now it's at that 50% level. I wouldn't consider that 61.8 too much because it's a bit near 50. If it can break above this 50, and you see here, this point. All right, 50 is at 150.45, but we have that previous level here at about 150.57. I would say that if it can break above this point, then I would say that we might see further upside on the yen. Again, this is anticipating that the dollar index is going to strengthen further. Okay, breaking above that resistance to the upside, that's going to drag the yen back up. It's not over yet for the BOJ. BOJ probably now thinking, are we going to come back to the conversations about intervention? All right, so it's back into that 150, above that 150 range. We might still be seeing further upside on the yen, driven by the stronger dollar. So what you could be looking out for in this case, 150.70. Stop loss no more than 30 pips, but I would say 25 would be reasonable. The take profit can get up to 75 pips towards that 151 dot almost 50 level. Okay, I want to check this. Let me just check this level. That's the body. Okay, coming back to the present, then I would actually say that we can take this two away and just catch this top of this level. So In this case, we're looking at a 25 to 95 on the dollar yen. Yep. Okay. So 150.7025 to 95. Buy 150.70, stop loss 25, take profit 95. Jamil, pound dollar yesterday took a sell 1.2379. Took a sell on the pound dollar. Okay, we'll have a look at that shortly. Yen is pushing up. I'm looking at this as the close of the hour. Maybe we'll have something. So pound dollar on from Jamil was that 1.2379. 1.2379 is right there. Sell to the downside, working out brilliantly for you there, Jamil. To the downside, still on a good profit. Hold down for good profit. Yes, I think that if your trade on the pound dollar looks like that, so about a 50 pip stop loss, about a 100 pip take profit, you could hold it down. You could be looking to hold it down to that support level. I am looking for a continuation to the downside because of that push on the dollar. So now that it's pushing down, checking if there could be any levels where it would hesitate on. That's 50% there. 38.2 is approaching. Okay, check this points out there. So that's broken. Okay, I'll catch this and think of this point here as that previous swing level there. Oops. Now we're done with that. We're done with that. We can take that one away and that away as well. Okay. So take all of those away. I'll catch this level here. So Jamil, I think if you're given the in profit right now, I would say move it to break even or secure some profit before you can look for it to hit lower. You check 5-minute time frame. 5 minutes, yes, looks like further downside on the pound dollar. For everyone else, so Jamil, if you had that trade, or given that you have that trade, I would say in this case, break even, take profit at 100 pips. I can't do it on TradingView, but I would say that even secure some profits. You can secure a good 40 pips even, and then let it run to 100. For those who did not get onto that trade, then you could be looking at a continuation only if it breaks below this support level, 1.2255. Stop loss 40 pips. This is a bit wide. Just watch out for that. Watch your sizing. Okay, take profit. I don't think take profit is going to go that way. I don't see a 130 pip move on the pound dollar. I'll catch 80 pips. I'll be happy with a catch of 80 pips just to that point. So there we go. Right, so it breaks below 38.2, breaks below that support level. Below 50, we can look to sell. You can rush in a little bit if you really have to, but I think the safer option would be at that point. Good one, Jamil. Okay, so I'll look at that 1.2255, 40 to 80. Again, remember, we are looking at a lot of dollar strength, anticipating a lot of dollar strength right now. So we want to consider some other possibilities is that if, for example, the dollar goes up to that point, hits 105.70 and reverses. What if it does that? right? Then you could even be looking at, and that's what I'm telling Jamil, secure your profits, maybe look to close out at 100 or close to 100, because you could be looking at a test and a bounce of that support. So even 1.23, if it doesn't break below 1.23, you're looking at a 30 pip stop and a 100 pip take back up. Okay, so it might come down. Alternate scenario is it does that back up again. That's if we don't see the dollar break above and turn down. But most likely, it looks like that upside is the most likely scenario. Jamil says my TP is in the demand area. Yes, it'll be somewhere around there. Okay. Then Ayakame was asking about the euro dollar again. I didn't have any trades because nothing triggered yesterday. Take those away. Big push to the upside, now looking like a retrace or maybe a correction back down. At this point, broken 23, breaking that, coming close to that support at 106.80. Ayakami sold at 107.07. 107.07, which is about there. Yes, as it broke out of that brief consolidation to the downside. For me, if it was so close to 107, I would have always waited for it to break below 107 before I would sell down. But I see where you're heading on that. A little bit dangerous. The only thing I would say is a little bit dangerous is it's very close to this support level. Right? It's very close to this support level. So the risk is that it sits here, doesn't do anything, and then bounces back up. But what I think is likely or could happen, now looking at the news again, just double checking on the news. Nothing major here. It could consolidate at this point before heading lower, which is fine. What I'm looking at, so Ayakami, I would say just watch that support level first. It needs to break before you can start breathing easy. And I think it's too far to look for 1.6660. Let me see, that's a 30 pip stop loss. 1.6660, 30 pip stop loss. Back down to this point, 60 pip, 70 pip, take profit. Okay, so what I'm looking out for here is that level there. Take that one away. It might just come to this point at 50. Okay. So euro dollar, I would say that you can even get in a little bit earlier. About that point there. 1.66 1.06, sorry. Keep forgetting the zero. 1.0670, 20 pip, 25 pip stop loss, 55 pip take profit. Could stretch down, but I think that would be reasonable. Yeah. Okay. Let me see. That one's fine because it's broken that support to head down. 1.067025 to 55. Sell 1.067025 to 55. 1.0670, stop loss 25, take profit 55 to the downside. We're still seeing that dollar strength continue, possibly. Move this away just so that we can see the candle. Then onto the US Swiss franc. I'm looking at some of the comments here. Okay. US Swiss franc didn't break, take that away, bouncing off, back up. Dollar strength, pushing it back up. That's a resistance. I think that's fair. That's 0.9. So that's why we have that there. I would actually switch these ones around. Right? Why we only have this number here is because it's a round number level at 0.9. That's a good strong, relatively strong support there. So what I'll be looking for here is dollar strength to push this up, but look at that. Right, look at what's happening on the dollar on the H1 time frame, trying to push a little bit to the upside. Jamil, I want to know FP market. What about thing? What do you mean, Jamil? Sorry, what do you mean? Tell me. Elaborate on that. Let me know. Okay, so dollar index, you see that it's pushing a bit to the upside. Well, it's trying to push to the upside, but yet we're seeing the US Swiss franc sitting right at that support level or that round number level. Okay, so what needs to happen here on the Swizzy first is that it needs to break above 50. It's broken 38.2, so we can take that one away, but it needs to break above 50 before we're going to see, we could see further upside. I'm kind of considering the possibility of that reversal, despite what's happening on the dollar index. Because I just don't know why, I'm curious why it's sitting right there without pushing up. Just thinking that 8990 is too far. 8995. Yeah, Jamil. So what about them? Very tight. 15 pip stop. 30 pip. This would be something interesting here. A very close trade. I don't normally tell you about a 15 pip stop loss and a 30 pip take profit, but something to consider here on the US Swiss franc. It's a bit odd because that's pushing up. Okay, so maybe that this is a dollar weakness scenario. 8995. 8995, 15 to 30. On a dollar weakness scenario, 8915 to 30 on a dollar weakness scenario. Something to try. Something to try. Yeah, and why I'm thinking that as well is just the way it's moving that way. Right? The way that's moving. Wait, catch the tail. Catch that. Yeah, it looks like it might hold. So something to think about there on the US Swiss franc. Then onto the US CAD, that worked out. So we were thinking, hey, continuation of trend to the downside. But as usual, I always give you an alternate scenario. What if the dollar strengthens further? So that move back up towards 61.8. Anyone got onto that? Let me know. Okay, let me know on that. Now with levels at this point, 38.2 needs to break 38.2. Needs to break above 38.2. Drag that right across. You see that is that point there. And in fact, you see it right there. So 1.3740 seems to be holding quite strong. If it breaks above this point, make that dotted, you could be looking at further upside. Again, because of that dollar pushing up. Close of the hour, we're in 10 minutes away from the close of the hour. This could be another good trade. 1.3760, stop loss quite tight, 30 pips. Take profit, 80 pips to the upside. Complete reversal, and you see that reaction there. So it came down, it grabbed that liquidity below this level here and push back up. So 1.3760, stop loss 30, take profit 80. I want to open an account here, so I want to know, is that a good broker? Okay, Jamil, get onto the Discord channel. I'll tell you more about that shortly. In there, not going to be talking about that here. Okay, buy 1.3760. 1.3760, stop loss 30, take profit 80. Take profit 80. There we go. Okay. That's fine. I really want to see this break. There's no trade, no good setup unless this breaks or rejects. This is the key level 105.70. There's a key level there. Don't do anything. I think that it's worth waiting until that breaks or you see a clear break of or clear momentum in a direction. Then onto gold, totally right, because of that retracement on the dollar, we didn't see gold push up. We didn't see dollar drop yesterday, so we didn't see gold push up. No worries, Jamil. No worries. But yeah, just reach out to me and I'll let you know. Now that trend line is well and truly broken. Support level here. I think this support level, I actually want it more because of that point. Now that it's breaking, dollar index pushing up, I would generally like to see this hit lower if we see the dollar continue to push up. And it's not ready yet. I take away some of these dotted lines. That one's okay to have. That one is, let's take that away for now. So if we look at that, that's reasonable as a resistance level. That's a support level is okay. That support level is, I'll catch this one here. then I might even be thinking of that more and putting that as a dotted line, and also that as a dotted line. Okay, so dollar index is very slowly, it's almost paused at that point because it knows we're watching. So it's pausing there. I would say that, let's check out this whole move. Why is this there? Take that away. Needs to break, hit lower, that's fine. I'll take that one away for now. Okay. Again, checking that, hitting down. It's not broken yet, right? It's not broken yet. And I would actually be very cautious on gold. You see why? Okay, why I say that I'll be very cautious on gold is you see that it's on the big, massive uptrend. All right, we do that. You see it's on a big, massive uptrend. And if we did that just for kicks, you see that that's 23.6 is coming to that point, 38.2 is there. So, and what you notice here, or what I'm noticing here, is that when it breaks past this point, there is a big tail and a tail here. Right? So it could, at this point, it could just come down and go straight back up. That also translates to the, that key resistance, or that resistance being very key, important. So what needs to do here is it needs to break past 1963 before I wouldn't do anything now. Only if it breaks below 1963, we'll see 1953. But if it doesn't do that, like what it's trying to do now, it could bounce back up. And I'm actually thinking 1980, 76 could be there. No, I'm still looking for that downward push because of what could happen here. This would be a longer term move. Right? This would be a, I don't normally tell you about longer term move. You're looking at a stop loss about 90 because of the risk, that kind of move, right? You could be looking at this kind of move back up on gold. Jamil is saying check weekly time frame. Let's check the 4-hourly first. That shows me a little bit of a push to the downside. The daily shows me push to the downside. Weekly definitely would show me a push. Not so much. I actually like it a little bit more on the daily. Okay, and that's what I'm looking for. I just think that it might bounce back up a little bit here, but ultimately, I wouldn't do anything on gold. Short-term move or short-term trades I'll be looking for. It's only if it breaks below 1963, then we would anticipate that it will get to 1953. Okay, break 1963 could drop to 1953 on gold. Okay, there we have it. This is the main thing that I'm watching. It's not broken yet. Now doing a quick check, it's hesitating right before 5-minute candle close. This might break, might trigger. Aussie dollar not yet. Might not have that retrace, might just be heading straight to the downside, so no head and shoulder, but breaking that previous low. Thank you, Jamil. US yen still pushing up at that 50% level. Okay, what I'll tell you all now is that we have possibility on the Kiwi, on the Aussie, and on the yen. Now, and we've done this before. We talk everything, and then at 4 o'clock everything reverses. So we're just highlighting possible trade setups. These are the three, and do make sure you don't jump into Kiwi and Aussie at the same time. Choose either one. US yen I like a little bit more. Pound dollar has a lot more waiting to do. Euro dollar a lot more waiting to do as well. US Swiss franc is odd. It's being very odd. So not something I always trade, but something that you could be looking at. 8995, 15 to 30. US CAD, the loonie could push back up, a lot more waiting. So the more immediate ones are Kiwi, Aussie, and yen. A little bit more waiting on the pound and on the euro. That's something that if you want to closely manage, and then on the US CAD, a little bit more to the upside. Okay, so with that, please remember, help me out, click that like and subscribe button if you haven't already. You've all been awesome. And also, just to let you know, I had many questions about a correlation between the 10-year yield and the DXY. I've done a write-up on that, quite a big write-up, right? Quite a write-up on that, so you can check that one out on my Trading View. And what else news do we have? Yeah, I'll update you all more about that tomorrow. CPI, Chinese CPI, Fed Power, GDP. All right. So it looks like it should be relatively clear for the rest of the week. What we are looking for is for that to break. If it reverses, then we'll look for some other setups on maybe the dollar weakness to bounce back up. Okay, so for now, please trade well, trade safe, and if you haven't already, do join us on Discord. And if not, I'll see you all same time, same place tomorrow. Take care now. Bye bye.